All right, so Fibonacci. There are multiple ways to draw out your fibs. To determine the direction, you have to understand direction. So if price is bullish, price that means price is going up, and if price is bearish, that means price is going down. Depending if price is going up bullish or bearish will determine your Fibonacci. So for example, don't worry about my placement right now, but obviously from this example, price is bullish, so you will want to draw it from your low to your high. You're going to have two different Fibonacci templates. Your first Fibonacci template is going to be bullish. If you haven't watched the previous video, go watch it. I'm not providing the settings in this one. It'll be bullish. And then if price is bearish, you'll be wanting to start your fib from top to bottom. And you want to make sure you're utilizing your bearish fib. What this does is it sets the parameters correct. We take our trades off of our 618, our 382, our 236, and the 50%, which is basically the spaces in between. All right, so now let's apply this to the actual chart. I have multiple ways of actually trading my fibs. The fibs are hella diverse. You can use the fibs multiple different ways as long as you're using it properly. By properly, that means if price is bullish, you're using a bullish fib. If price is bearish, you're using a bearish fib. All right. So let's actually, I'm gonna do this example all on gold. Could gold is just the best example to give right now. So yeah. So how would we draw out our fib for gold right now? There's multiple different ways because we also like to incorporate something called ranges. There are ranges inside of ranges inside of ranges inside of ranges. What does that look like? This looks like this. This is our overall bearish range. With inside that bearish range, there is another active bearish range, which is this one. With inside that bearish range, there is another active bearish range, which is this one. Okay. Mind you, that is telling you you can draw your fib from each and every level. So if you decide like, hey, this is why I say that the fibs are hella diverse. If you're a swing trader and you want to swing, then you're going to draw your fib from the most macro perspective, from high to low, and make sure it's your bearish fib. Cool. Now, if you're more of like a day trader or
Mhm.
intraday maybe, you can do a more internal range and you'll be doing it from this fib, from high to low. Same concept. All right. Now, if you didn't want to do that either, and you trying to scout and you're trying to be on an even smaller perspective, don't worry about my time frame. Don't worry about that I'm on the 4 hour. We're just looking at the ranges. We don't care about time frame really. And let's say you didn't want to do that one, you want to do this one. You would draw it out from here to here. Bearish. Okay. Multiple ways to draw out your fibs, and obviously you would just scale down to your lower time frame to get that entry. And this is how your chart would be looking, for
And
example.
there is a bullish range that we drew up this morning. So it's
Yep,
kind of so many
I'm gonna
perspectives.
get I'm gonna explain that one too. I got you. So we have a bearish range inside of here. And we know that until price breaks outside of this bearish range, that okay, what is price going to do once it breaks outside of this range? Then what? Okay, then you scale back out and look
Mhm.
at your next range. Oh shit, okay. This is my next range. So if I know this is my next range, you're just gonna draw a fib from there to there. Okay. Now, it doesn't happen often, but there are times where within inside a bearish range, there is a bullish range forming, meaning this from here. You see how each and every swing low fails to break the previous swing low?
Yeah.
Price is continuing, well, that's like price is continuing to trend up. It's slowly but surely trying to go up. And now that we
Mhm.
know that, it's like, we have to take that into an account. That doesn't mean that there is a right or wrong way to draw your fibs. Well, there is a right or wrong way to draw your fibs, but as long as you're drawing it out properly, it's okay. Meaning, you may have a person named Doug. He's drawing out his fib like this.
Mhm.
No problem. But you may have me. I'm drawing out my fib like this. Bullish. No problem. Nothing really changes. You're still gonna get entries. You're still gonna be correct in your analysis. There's multiple ways to draw the fibs. That's why I say they're so diverse.
Mhm.
All right. So, um, let's say we are actually drawing out a bullish fib right now, okay? Because that's the fib that we actually utilize today for our entries. And the bullish fib started from our swing low, which was down here.
Gotcha.
up to the swing high, which is up here. Okay. Since I know that this swing low is the swing low that governs everything in between,
Mhm.
I know that this is the equilibrium of price action. Everything in between shall be respected. No ifs, ands, or buts about it. So if I go ahead and I draw out a bullish fib from here to here, make sure it's bullish. I'm going to get rejections at specific levels where price action also correlates with it.
Gotcha.
So let's scale down to a lower chart, like the 15-minute time frame or so. And you're going to see like reactions and rejection levels off of 50% and the bottom and top of our 618 and 382. All right. I'm going to just draw this real quick just so y'all can see it. Boom. 50% space in between. Let me just make it, actually, no. Make it, I need all pass. There you go. Opacity.
Ah,
Boom,
perfect.
boom. 50% space in between. So entries like this, mind you, all of this price action that happened to the left of us would have been a different fib, meaning this fib wouldn't have been drawn out properly until this high got executed. Meaning everything to the right would have been trades that we would have taken. Everything to the left would have been from a different perspective, okay? Because obviously you don't know. You're only going to know until after the high was created. You're not going to know in the moment, not God. So you got to wait until price creates that high, and then you can go ahead and adjust your fib accordingly. So once price adjusted that high, all you're literally going to do is take breakouts and retests in the direction of the trend at our 236, 382, 618, and 786, and the spaces in between. Let
I
me
think
delete
I missed. This is the part, and you did mention this in another video. Taking break and retest at the direction of the trend.
in the direction of the trend.
Part that I was like, okay, the trend. So are we looking at the macro trend or the trend that we are looking like we drew a bullish fib? So we are trying to go for bullish trades. Is that the
Exactly.
mindset?
So, a bullish fib does not mean you're going for bullish trades at
Okay,
all.
I'm fast. Okay.
So if I draw out a bullish fib, that literally means that the range that we're trading in is bullish. So I'm gonna catch the right trades in the direction, not of the trend, but just in the right direction.
Okay.
So
Okay.
it may seem confusing, but this is what I mean.
Thank
So
you.
when I say you want to make sure that you draw out a bullish or bearish fib, this does not. So obviously this fib is bullish, but we're gonna take sales. Mind you, we're on the 4 hour time frame. We're
Okay.
gonna take sales. All this is telling us is like, yo, I want to make sure that the direction I take my trades and where I take them at are correct. That's it. And I have to make sure I identify the proper range. Okay. Now, once you determine your high, meaning your high would have been right here,
Mhm.
and you see how price is downtrending, you want to take breakouts and retests in the direction of the trend. So, like, where is my playback? I got you. I'm gonna show you. Wow. Let's say we right here in price, right? We don't know what's going on. All we know is that we have a swing low and a swing high. This is how we looking at our fib.
Mhm.
All you're going to do is take breakouts and retests of the 236, 382, 618, 786. So, for example, you're waiting for a breakout of your 236. Okay.
Mhm.
Boom. Breakout of your 236. Where is your entry? Stop loss. I mean, entry here. Stop loss here. Targeting a 1 to 2. All right. 1 to 2 R may look like a big trade, but it's not.
Mhm.
Okay. Or if you don't want to have your stop loss that big, you can simply go like this. You draw out another fib and you put your stop loss above your most recent swing level. Well, your most recent Fibonacci level. And this will be the trade that you're in, targeting a 1 to 2 risk to reward ratio or a 1 to 3. It does not matter. I'm low key, it doesn't matter. I would say like you're on the 15-minute, you want to target a 1 to 3, but it doesn't matter. Okay. Now, from here, let's just let price play out. Boom. Cool. So as you let price play out, what do you do next? It's like, okay, after hitting a trade, actually, how do I determine where the next trade is at? How do I determine which one to take the trade off of? Like, damn, I have a 382, a 618, a 786, and spaces in between. I got all these different levels. How do I determine where I'm going to get a rejection at? You're going to determine where you get a rejection by the most rejections at that price. So you see your 618, right?
Mhm.
And you see how you have all of these highs to the right of you? I mean,
Mhm.
sorry, to the left of you. That is how you know where your next trade is going to be. So you know in your head, okay, I got hella rejection right here. Fuck, I got hella rejection here. A lot. And this rejection goes all the way to over here. All the way to right here.
Yeah.
What I used to teach is in my price action videos, I gotta make another price action video. But in my price action videos, I was telling people you have to learn how to find the level that is responsible for all the rejection at a specific price. Meaning, if I have rejection, 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 um, and rejection, I'm like, damn, what caused all of this rejection? It had to be something to the left. And then if you look, I see this huge wick, and I'm like, okay, that's who's responsible for the rejection at price. So technically, we can delete this one. This is the true level right here. And you see how it aligns?
Yeah. Yeah.
Boom. Same thing with up here. This was, well, there was multiple levels, but this was the main level that caused price to reject these levels. It was a 4 hour wick. 4 hour wick right here. Boom. 4 hour wick. This is what caused price to reject.
Mm. Okay.
Boom. Now, real quick, real quick, before I get all the way into it, I'm gonna show you. Well, I'm gonna let price play out, and then I'm gonna show you how it plays out from a whole entire different fib and how it still made complete sense. All right, so let's just let this play out real fast. So you see how as soon, well, let me go back to it. It kind of happened hella fast. Boom. Let's go back to here. 15-minute time frame. We're looking for an entry. Mind you, let me just get back into it. I kind of went too fast. We're looking for an entry at our 618. That's what we're looking for. We have all of these rejections, and it also aligns with our fib level. We're looking for a trade at our 618. That's all we're looking for. Where a stop loss most likely going to be? The 50% space in between. Okay. So we can go ahead and delete this box. We don't really need it anymore. That was just a representation to show you how to identify like why price was rejecting there. Boom. So let's let price play through. And all you're going to do is simply look for a bullish reaction at your 618. Bing, got it. Boom. That's already TP. So bullish entry right at your 618. And I tell people all the time, I still get questions like, how do you know to take the trade at the 618? And I'm like, I just explained it to you. I don't well, I don't trade. I don't really use I don't market execute. Like when I trade, I do limits. I have like a limit order. So for example, if I see prices falling, I'm gonna have a limit order right here at my 618, and that's just what I'm gonna have. It's gonna be boom, straight like that. Meaning when price gets to my 618, what happens? I'm putting my trade instantly.
Yeah.
Where am I gonna take this trade up to? I most likely want to take it back up to my 618. Why? I mean my 382. Why? Because my 382 never got retested, has it?
Oh no,
So
that.
the fibs are only here to help you with one, your direction model, understanding where buyers and sellers take control,
Mhm.
and two, an entry model, where the hell to get in and get out at.
Okay.
And I feel as though that's low key all you need. Now, some people are more complicated and they need more details. I cannot provide that for you. I'm a very direct, simple person. So this trade that I'm taking it strictly off of the 618, targeting the 382. Why am I targeting the 382? Because the 382 never got retested. Like, yeah, technically it did on like the 1 minute time frame, but it never got retested. This was one execution. This was the second execution. This was one leg to the downside, second leg to the upside. It never
Gotcha.
got retested. So that's where we're taking it up to. Okay. Um, yeah, let's take that up to there.
And
Now,
based
go
on
ahead, go ahead, go ahead.
there, when once you're finished, I'm going to show you the trade that I took today that I lost, and I think I'm starting to understand a little bit about possibly why I lost it. But I'll show it to you so you
Mhm.
can see um,
The trade
everything that.
that you lost today, you took a trade on gold, right?
Yes, I did.
You lost it because you try to buy and you try to buy, right? Or did you try to sell?
I tried to sell at the top three, sorry, 236. Yeah, this is the same fib.
Yeah, it's right
Yeah,
here. This is a trade you try to
yeah,
take. It was right here.
that yeah, exactly. That's the one that I was trying to take, and I and the reason why I was like, okay, well, I do see that it rejected off that zone. Like there was a couple, one, two, three, and then I saw the trend line. You know, I did like a downward trend line, kind of where it was going down. So my thought was there was going to be a reaction there, going down at least for a little bit. Actually, a higher, like, yeah, the first tip was correct. The second tip, and then that third tip, yep, that's the one I marked out.
Okay.
Yeah.
I'm gonna tell you why you
So
lost the
I would
trade. I'm gonna tell you.
say yes.
This is why you lost. This is why you lost the trade. You have to
Uh-huh.
incorporate. You didn't. So you mentally applied your entry model, but you never applied the direction. That's why you lost it. And I tell people this all the time. Just because you get an entry at your 236, don't always take it. Okay. And I'm gonna tell
Okay.
you why. Here's why it's so good, and you're gonna understand it right now. Right
Okay.
now. Watch. Right now. It's crazy how the mind works, how an individual can go from ignorance, which is pretty much unknowingness, onto the
Yeah.
unknown, uncertainty to instantly knowing. And I'm finna break it down. So the first reason why I'm gonna tell you why the trades won and then why that
Mhm.
one specifically lost. So the first trade won because this is just a simple break and retest. This was the change of character, the low that was broken that indicated sales. Also, it was the 236. So this reaction was natural. Price sold from there. Cool, right? But you see how price never came to our discount yet?
Yeah.
All that means is price has the full ability to continue to sell off the same levels as many times as it fucking wants. Because it
Yeah.
never came to buyer's territory. So who has control? Sellers. So when we apply that, yes, you can, yes, don't get me wrong though, for the people that's watching, that does not mean to only take sales. So like, cause I'm my bad if I sound frustrated, but a lot of y'all don't incorporate everything. Everything that I'm teaching, you need to incorporate everything, not just one part. So when I say like, yeah, the reason that trade won is because it didn't come to the discount. I'm only saying that because price literally didn't come to the discount. Meaning when price gets to the discount, you can buy it. That does not mean, oh, each and every time, always continue to sell it because price then comes to the discount. No, apply, actually understand what's going on in price, actually incorporate price action, see what's going on. Okay. So that was the first reason why price sold. It never came down to discount yet. So price came back up. It has the ability to, it has the right to. Now, I'm gonna just let price keep going. Let me just let price keep going. I don't even know how far it goes. Boom, boom, boom. Second entry, right here. You see how price came up, tapped the 236, pushed back down? The
Yeah.
reason, I'm not going to tell you the reason why this executed, but I'll tell you, I don't, because I don't know that. But I do
Mhm.
know the reason why this failed to continue. Let's drop down to the 5 minute time frame. You see these highs and you see how price failed to break above it,
Yeah. Saw that. Yeah.
meaning who still has control?
The sellers.
Sellers. Simply like that. We always got to understand that there's always buyers below you and sellers above you. Meaning, if price fails to break a high, that means the sellers still have control. And if price fails to break a low, that means buyers still have control. So here's the funny thing. Here's the cool thing in between all of this. Watch now. Listen to the fight. Watch
Mhm.
this. I'm gonna follow price action with my pathway. So buyers got initiated here, right?
Mhm.
But before buyers got initiated, there was a high to the left of us, meaning buyers don't have control. They just buying. So we come, go down, we break it. That's the indication that price wants to continue. Buyers just won. They didn't win the war, but they won that battle.
Mhm.
Price retested, broke back through. Now buyers have been confirmed. Sellers are too weak to push price back down to break this low. Cool. But then we get a double top. Meaning buyers are too weak to push price higher. You see the fight? They're fighting. But then instantly as we made a swing low, price had failed to break our most recent swing low. Meaning that the buyers still have control. If sellers had control, we would have went ahead and what? Broke
Right.
this low.
Well, okay.
But we didn't.
Yeah.
So buyers have control. So this is just understanding who has control. You're
Mhm.
reading the story, you're reading a story, the language is candlesticks, you need to transcribe it. Transcribe the language. understand what's going on based on swing highs and swing lows. So now that we see, okay, bet buyers for sure still got that damn control. Meaning what? I can most likely take a breakout of my 382 or a retest of my 382.
And go for a buy. Yeah.
So breakout TP or retest TP.
Hmm.
Boom. Cool. So now we have a new swing low, which is right here.
Hmm.
Our new swing low's here. And price is still buying. Bet. But then out of nowhere, what happens?
We break that swing low.
Dump. After we dump, we break two swing lows. Not one, but two. Meaning sellers aren't fully confirmed, but they damn near confirmed. They strong. We broke through.
Yeah.
We're sitting here like, why did price dump that hard? Why did price fall that strong? Let's look for an inducer. I don't know if you remember in my last video, but I said we need something to induce buys or sells and something to pull it to our TP. So if we're looking at price and we're looking at this high, what caused the rejection at this price? It has to be something over here. So that's where you start looking for anything that induce buys and or sells, okay? But that's not even what we're getting into. But I'm saying that's what you want to do though. Anytime you see a big reaction or a big move, you always want to look to the left and see, what caused it? What was the origin of it? Because maybe price will do that again. All right.
Yeah.
So as soon as we broke this low, that said what? Oh, snap. Buyers aren't as strong anymore because clearly sellers wanted to win. They broke through. They
Mhm.
broke through hella strong. After price broke through, you see how it never came up and retested the 236 yet.
No. Yes. Yeah.
Never retested it. It has to retest it. And I say it all the time. Imagine you're driving to Walmart and you pass the gas station, but you didn't know. But you have the opportunity to make a U-turn. You're going to make a U-turn to get to your destination because you need gas. So look at it just like that. Price is ran out of steam. It has to use the last little bit of its energy to get back up here. So what? Boom, it can go straight back down. It has to. Price is never going to just buy or just sell ever. So let's let that play out. Let's just let it run through. Boom, 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 boom. Retest. So
Hmm.
now you see, as I'm explaining it, this should help an individual determine what trades to and what not to take. So this
Yeah.
236, it's a no-brainer to take it.
Yeah.
Why? Sellers won the battle, but they never retested. They never retested this high. I mean, yeah, this swing low. Each and every time going up, price retested it. So why would it not retest it going down? Got to sell, right? Simple. And you go on from there. Now, if price comes up to that same level again, you're going to continue to take it until price goes to the other extreme. It has to. The same way price has to retest before buying or selling is the same way price has to go to the opposite color before
Yeah.
buying or selling.
I like that.
Has to. Each and every time. There's never really a time where a price does not go to the opposite extreme. But until then, you want to continue taking the trades in the same direction of the market. So what's the direction? Sells. We're going down right now. So you want to continue taking sells. Can you take buys? Yes. But as of now, you're going to continue to take sells. 236. Price comes back up to our 236. Another entry for sales
Gotcha.
until price comes to the green. Once price comes to the green, everything changes. The whole perspective. You have now mainly, I'm not saying you can't sell, but you kind of only want to look for buys. As soon as price comes to the 786. As soon as price comes to the 786. So let price play out. Meaning this, so before I get into that, are you able to understand why you would have sold it here and why
So
you would have sold it here?
yes. So I see the first retest, right? So that makes sense with why I would do that. Now, there is a second retest. My thought process seeing that is like, okay, we've had the first retest. I'm nervous that this zone area is weakening. And it seems like it. So I'm thinking,
Nothing. Price doesn't weaken until it gets to the other color.
oh, okay. See, we'll see that's the mindset shift that I'm now making.
Hmm.
But as to why I would sell there, I'm guessing I would sell there because it hasn't gotten to the green area yet. It hasn't
You're
touched that
s-
786. Is that the
you're
logic there?
selling there. You're okay. So how do you interpret the fibs? That's my question to you. When you
That's
look
good.
at the fibs, when you hear me teach about the fibs, do you look at them similar to a signal or do you look at them as a confluence?
I think the way I enter, I think I look at it more as a signal.
Okay, don't. It's a confluence. It's a confluence. This trade, the 236 is not telling you, oh, sell it.
Okay,
The
so
786 is not saying, oh, buy it. But you know what it is telling you? Nine times out of ten, this motherfucker gonna buy or sell.
okay,
It's gonna do it. But only take the trade is if it's in confluence with the trend.
got it.
Like if you see, you gotta understand, like there is something called like resistance,
Mhm.
right? We already had before all of this price action was even a thing. We literally had a rejection at the exact level where we took our entry already.
Yeah.
We had a rejection here. So now that as we let price play through, let me just leave it. Hold on, let me fix it up. You see how that same level got played on
Mhm.
once, twice, three times, four times, five times, and then broke?
Yep.
Imagine only taking that entry right here the first time and never taking it again.
Right.
It just sucks. It's just like, damn, no. You want to continue to take the same trade off the same level because history is going to repeat itself. Why would we anticipate for history to do something major? You want to anticipate for history to literally repeat itself. So if we see that price rejected here once, twice, why not take it a third time? Why not take it a fourth time? Why not take it a fifth time until price shows me otherwise?
Gotcha.
Until price shows me otherwise, I'm going to continue to take the same trade off the same level with the same stop loss and the same take profit over and over and over. Because I kid you not, there's been trades that I've taken where I've taken the same damn trade. Let me go to NQ, for example. For NQ, we took the same buy over and over and over and over right here previous weeks ago. I'll show it to you. This one right here, 618 buys. Over and over and over and over. 618, bing,
It,
bing, bing, bing. And then
yeah.
and then we hit stop loss. But guess what? I'm up 6,000 already.
Yeah. Yeah. That's
You know what I'm
pretty.
saying? So 1,500, 1,500, 1,500, 1,500, stop loss, minus 500. Oh my God. You know? So it's like you have to, the way that I teach is so mechanical. It's mechanic over intuition. That's how I feel. That's what I put it over. That's that. I know it may seem crazy, but like I put mechanics over intuition because the system is gonna win. The system is gonna is what's gonna give me the not the person. Like even in the industrial system, like as time went on, I heard that they said like they're gonna start improving systems, not people. People are gonna be people. People are gonna be
Yeah.
flawed all the time, no matter what. Humans will forever be flawed until we become non-existent. But what has the ability to not be flawed? Systems.
Mhm.
Systems. Because
Yeah.
sometimes humans put more weight on how they feel rather than what they actually see in reality. We
Mhm.
put more weight on what I think is gonna happen rather than what's fucking happening. So what I like to do is, okay, I don't care about what I think. I don't care the fact that I think that price is oversold or overbought or already came there two times. I'm gonna buy it until it hits my damn stop loss over and
Gotcha.
over and over.
That is
So,
a very, I like that mindset because that's what happened. It's just like, oh, I'm thinking, well, it's hit that. I'm nervous. Oh, so exactly. So I think
mhm,
that it takes away a lot of the, like you said, the whole intuition. And you're just looking at, of course, understanding where the direction is,
mhm,
understanding. And I think what happened, and you're going to show me like why I missed that one, but now listening to what you're saying, it had already hit the discount if I'm not mistaken. So, and the indication was like showing buys.
mhm,
So it made more sense to think buys versus sells at that point. But
mhm.
um, yeah, it's making sense as you're explaining. I'm going to
Bet.
rewatch this over and over again.
Bet.
It's really good.
Bet. Let me just put this right back then, real fast. Boom. No, it was a bullish fib we drew today. I'm
Yeah,
tripping.
that was the bottom one to that middle swing high. No, not that one. You were further up that
I'm pretty sure it
recency.
was right here, right?
Was it? Oh, I'm sorry. I'm looking at the 1 hour. So 4 hours is what I have. But yes,
Am I
that's it.
tripping?
You're right. You're right. You're not tripping.
No, I think I am. Hold on.
Goes to the 4 hours. The
No,
time.
I know what it is. No. It's this. I know what it is. I know what it is. It's this. I already see it. I was just a little confused. This the trade you lost.
Yeah.
236. Yeah. Here it is. All right. So the reason you lost this trade is purely so now to wrap everything up. Now you know exactly why you lost it. You see how as soon as price went to the other extreme, this shit said fuck everything and just went straight bullish.
Yes.
There you go. That's simply it. And now since price has went bullish, this is man, I'm going to eventually use this as a swing trading thing too, because I know once price goes to the other extreme, it's gonna break out the trend. It's gonna
Yeah.
break out. And that's what it's gonna do now. So as soon as price retested this, you could have bought, and we already did. We've been buying, we've been hitting in priority. So if you would have bought this, this is like hell like a lot of money. Even
Hmm.
if you didn't hold it, you had another option to get in right here. Why are
That's
you not going to get in right? Reason it may look like it's a random ass entry, but I promise it's not. That's your 50%.
yeah. It is so
None of
crazy.
yeah,
So
none of my entries are random. They look random, but they're not random. Imagine you took every trade 50%, 50%,
oh,
50% if you took, you would have lost it. Cool, no problem. You would have lost this one if you took 50%, but then guess what? 786 TP, 50% TP, 236 TP. You know what I'm saying? So it's just over and over and over like clockwork. And then now you see how price never came to the discount. TP sells, TP sells. But then as
mhm.
soon as price came to this sales, they kind of stopped working from up here. And
Yeah.
they clearly just said F everything and bought. And also, you see how this 382 like
Yeah.
internally, not externally, but internally, a lot of trades could have been taken off this 382 as well. Like if I scale down to
Hmm.
the 5 minute time frame, like imagine an entry like this, 5 minute time frame. This is beautiful. 382. This is one hell of a move. If you catch it like this, obviously it'll be here. Stop loss placement, confused. You're gonna grab your fib from here to here and put it
Mhm.
right above your 236, targeting a 1 to 2 or a 1 to 3 risk to reward. Boom, TP hit. Let's say you got another one. You had another entry here. Where's your stop loss gonna go? Now you have a stop loss this time. You have a swing high. So entry 3-8. Let me turn this off. How much time do we have left on this? 5 minutes. Okay, cool. Entry here. Stop loss here. Targeting a 1 to 2 or a 1 to 3. Here's the thing. You got stopped out. Womp womp. Unfortunate. Now look. Here's what I say. This is just a loss. It is what it is. But a stop loss and a take profit doesn't determine a good or bad trade. What determines a good or bad trade is the reaction at that level at which you entered. So if I entered here and I got stopped out, all of a sudden it's a bad trade, right? But what if my stop loss was right here? All of a sudden it's a good trade. You see how subjective that is?
That's
All
true.
of a sudden, good trade, Zeke.
Yeah.
But if I put it here, all of a sudden it's a bad trade. No. No. This was an amazing trade, an
Yeah.
amazing entry. Stop loss was just a little too damn tight. Price just wanted to break this high, and it didn't even fucking break it. It didn't even close above it. It wicked it and went straight down. Still a beautiful entry. Okay. Right here, consolidation. You would have got stopped out a few times. But guess what? Entry. Bam. So you're gonna get entries no matter what. You're gonna get entries no matter what. But then as soon as price, like I said, came inside the discount or whatnot, that 618, well, you had two more times to sell from the 618. Well, 382, I mean, would have been right here once, and then your second time would have been right here twice.
Gotcha. Yeah.
And you would have, oh, damn near hit. You would have damn near hit. And then,
But would I have risked that? Like, would I have risked that as a sell, or would I have been like, you know what, since you've already hit the other side, I should be prioritizing buys.
yeah, you can do that. Exactly. If you want to do that too, hell yeah. So if you see how price already came here and you're like, I don't want to take a sell off my 382 anymore. I want to buy it instead. So you wait for price to flip, you can do that. But get this.
Yeah, shows you.
Get this. I know it may seem like a lot. There's a lot of buts and a lot of it seems highly subjective, but it's not. It's just experience. You'll get it as you continue, trust me. Um, how would I put this? You see how price bought off of our 786.
Mhm.
How would I explain that? I guess the way that I would explain it is purely up to you. You can either continue to sell off of your 382,
Mhm.
okay, or you cannot sell off your 382 and instead anticipate a breakout.
Okay.
Simple. It's as simple as that. The fibs are hella diverse. The fibs give you the ability to choose how you want to play, how you want to draw it out. As long as you're taking trades properly, as long as you're buying from down here,
Mhm.
selling from up here, and drawing out the proper range. Because you see how
Yeah, no,
this
it matches. It aligns very well, like the resistance where price is rejecting.
this fib would have been drawn Wednesday, November 19th. We would have never had to mark up our chart again. We still don't got to mark up our chart. It is currently the 24th. I haven't marked up my chart on gold. I have, but we wouldn't have had to. The only reason I have because I've been teaching.
Of
But you
course.
wouldn't have had to at all. So that's days, no marking up, no nothing. But randomly, how the hell are you still catching trades and you only marked up once? Why do you think the name of my strat is pre-market design? My levels are predestined.
Mhm.
I marked like this would have been here.
Like sounds very
The
feed.
fib would have been just like this way before the market even knew what the hell it wanted.
Gotcha.
This is how my fib would have looked already beforehand, and we would have been taking trades beforehand
Mhm.
like this. 786 sells, 618 buys, 786 sells again. Well, this is 236, my bad. And then 786 right here, you're gonna buy this. You always want to buy here and you always want to sell here.
Gotcha.
Price flips it, and you see how price is just respecting shit.
Mhm.
50%. Broke back up, retest, bing, almost damn near hit. Then price eventually ultimately broke all the way through. And that's just that. Now, how do you determine a lot of ways that I say, like, how do I determine which one I want to take? It's just by the support at the level. So if I know I got way more resistance up here, I'm more prone to take this. If I got more resistance here, I'm more prone to take this. If I got more support here, I'm more prone to take this. Or if I have more support here, I'm more prone to take this. Why do you think we had hella rejections at our 618? If you look to the left, look where we got all the rejection at beforehand. There was rejection at this 618 before this 618 was even a 618.
Yeah, that's true. Yeah.
We already had rejection from right here. So why not? This is how you know the fibs are just good because the fibs align with price action, but price action align with the fibs because the fibs are there first.
That's so
Weird.
that's so
Weird.
funny. It's like magic.
Exactly. It's weird. It's like how the hell did this 618 align with price action that already happened, but the price
Yeah.
action was already here? It's weird. It's
Cool.
weird, but that's just mechanical trading. This call is actually about to end, and I'm gonna send you another link, okay?